Good morning. It is Monday, November the 14th. I almost forgot which month it was. Monday, November the 14th, 2022. This is Dave with Systematic Investors Group, and it's been about a month since my last update, but some significant things have happened in the market. So let's just jump right in. So let's start out with the S&P futures, and you can see we've had a pretty significant move in the markets last week. And in our last update, we were talking about this momentum divergence here off of these lows in this kind of battleground area that we were fighting, or the market was fighting support to see if it could hang on to. And you could see that this positive momentum divergence, that is when the price is going lower and the momentum is going higher. You could see that in the RSI 5. You could see it in the MACD. And then you could see that we were also setting up a move in the Bollinger Band squeeze with these red dots firing, telling you that we're going into a consolidation, but we're ready to make a move, and you just don't know which direction it's going to fire. But there were, obviously, you could see the momentum was going to the high side, so that was giving us an indication that maybe the market was ready to move to the high side. Now, this has been a pretty crazy time in the world and in the market, so there's just a lot of things going on. But just looking strictly from a charting perspective, we did hold that level. We were talking about maybe seasonality coming into play off of the middle of November, or sorry, rather October, the middle of October, where we usually find some sort of footing and a low or a bottom, and then a potential move into a Christmas rally. Now, if you look at this pronounced downtrend channel, there are a few key things that have taken place here. So as we just mentioned here, and we just covered in previous videos and just briefly here, we had this momentum divergence off of what looked like a basing pattern or a box pattern, a momentum divergence, in other charts it looks like a double bottom, and we'll kind of get to that. But you've also had a structural change. So what I mean by that is, markets that trend higher, or stair step higher as I like to call it, they tend to put in a series of, and this is just basic technical analysis, but they tend to put in a series of higher highs and higher lows, right? So you have, I always say this backwards. My mind knows what I'm trying to say, but my mouth just can't say it all the time. So you've got, a higher low here, higher low, and then you've got higher highs. So that's the basic definition of an uptrend. So then we've been obviously doing the bottom in an intermediate downtrend where we have lower lows and lower highs, right? So you've got this high, you've got a lower high, lower high. This one is higher than this, but essentially, like from these major peaks, these are lower highs, and then you've got these lower lows, right? So we just put in a very basic structural change here, and when you see the market shifting, you can see here you've got a stair step higher, right? So what's happened is you put in a low, then you've put in an intermediate high, and now you actually have a higher low in here, and then you've broken the peak of this area here, and so you're set to start putting in higher highs and higher lows potentially. Now, this is very early in the game, obviously, and you're still below this major downtrend, which forms this downtrend channel. You're below this major downtrend line. You haven't broken that yet, at least in the S&P futures. Now, if we jump over to the NASDAQ, you've got kind of the same thing going on here, where you've got this major downtrend line. You've got this what looks like a double bottom, and you just have this major spike higher from last week. Off of the, I believe it was a CPI number. I may be incorrect about that because I don't really look at the reports as they're happening in real time, but I do notice obviously the effects they have. Now, you're still below some major downtrending moving averages and this downtrend line. But if you kind of zoom out and you say, okay, well, you look at all the indices, let's look at the Dow futures now. And it's pretty obvious, if I actually go to today, it's pretty obvious that the Dow has been the strongest and is kind of leading the action. So some of the things that I like to do is I like to look at, okay, which indices are leading, which are lagging. Obviously the Dow futures are leading, and they've already broken their major downtrend channel. In our last video we were talking about this potential double bottom area, and if we broke the peak of that double bottom area, you could, using measure rules, you could double that and bring you up to about 32,000. Well, we've easily cleared 32,000. We've gone 1,000 points higher, more than 1,000 points higher. And the break of this downtrend channel was met with a very strong up move, and we're a couple of bars above it. So of course we could just we could puke and fail, because we are actually kind of oversold, at least in the indicators, and there is this kind of negative divergence. But if we can hold above, we're above the key moving averages, the key long-term moving averages, including the 200, which is pretty significant. We've started stair-stepping higher, and we're above this key downtrend line. So if we can stay above this key downtrend line, then I think we have the potential to move higher. Now you can see here we're at some obvious levels of resistance. We've got this previous peak, we're oversold, so it's not uncommon, like it wouldn't be unusual for us to have a little bit of a pullback and then pull higher. But you essentially want to see us hold this downtrend line, and we're going to be looking at the Dow for guidance because it's obviously leading the indices. So having said that, the markets look short-term positive. We have the potential to rally into Christmas with the seasonality that's taking place off of the middle of October seasonal tendency, low yearly tendency, seasonal yearly tendency, if that's not clear. And it's very interesting that these things are happening. Now, if you look at the USD CAD, we were talking about that in some previous videos, and how it looked like the natural gas chart in terms of this negative divergence that we were having here off of this major move. You've got this kind of parabolic move, and then you've got the divergence, and that kind of tells you that things might be time to give it a rest and ready for a pullback. You never know how significant that pullback will be, but if you just look at the natural gas chart, it looked very much the same, right? Where you had you had that negative divergence off of a pretty good move higher, not necessarily parabolic, but it was pretty steep, and and we saw how that played out, right? So the USD CAD, which I believe was moving opposite of the indices, kind of did the same thing, and that move is sort of played out, right? And it actually went negative, and it formed a short squeeze and fired to the short side. The MACD crossed below its zero line, and now the USD CAD is coming back into some of these support levels, including dynamic support with these key moving averages. So that's kind of played out. It could potentially go lower, although you're starting to find some support there, so it wouldn't be unusual, just as the stock indices they look like they're probably ready for a bit of a pullback after that big move higher. The USD CAD looks like it's ready to find a little bit of support in this zone and maybe have at least a couple of day bounce. So having said that, if we just jump back to the Dow, the Dow, it hasn't really cleared this downtrend line by much, but if it can hold above this area or even consolidate, that's a positive for the stock indices. Now, having said that, and having said all of this, our trading strategies are starting to get buy signals. So if we go over to our website here, systematic-investors.com, I was just looking because my production strategies are going to start taking some more buy signals today. Now, there's two ways our strategies work. One is they just print out a web page that just shows what signals are taking place. And then another way it does it is it just it'll shoot those signals over to an online folder that Alera Portfolio Manager. So for example here, Alera Portfolio Manager can access. So these are the signals here that it will access, and you can see on the buy side, it has this particular strategy, the squeeze pause sprint that trades the S&P 1500 has 1, 2, 3, 4, 5 buy signals, and it always has sell signals because there's always things to close in case you have something in the universe that has been left over from previous trades. So Alera will just take care of this automatically. But you can see here it has these new buy signals, and in the Russell, the same strategy on the Russell 3000 has some new buy signals as well for today. And there's a couple strategies I don't have here, but so one of the ways that we'll do it is we have it set up so that you can automatically run it using Alera, but you can also visually look at the signals if you're signed up to our website and you just click on link to strategy signals. So the RSI2, which I'm trading, and I'm also trading the supercharged momentum trend, which are free strategies, but I actually do trade in my live production account with real money. You can see here if we click over to the RSI2, we've got a couple of buy signals. We got REGN and KHC, which are fresh new buy signals that just started coming in today because we've cleared the criteria for the regime filters that are within these strategies. And if you look at the supercharged momentum trend and we look at the daily scan for that, you can see we have a couple of buy signals as well in GMED and SAM. So it'll be interesting to see. I hope this isn't just another, we've cleared the regime filters, we take some positions and the market craps out. I hope this is kind of a new intermediate uptrend so that our strategies can get back to work and start making back some money. So that's kind of what we're looking at. If we look at the squeeze pause sprint, you can see here, we've got those 5 strategies here, so you can actually visually see what the strategies are doing using these strategy scans, which we push to a new web page every day. You can see here it will give you the date for the scan, and these obviously were generated on Friday, the end of the close on Friday, because these are end of day strategies, and they're all ranked by priority, right? We have a ranking algorithm that tells you, if you have enough open positions available in your portfolio, this is the first to buy, this would be the second, this would be the third, etc. So I hope that helps. This video's it's gone a little bit longer than I want. I'd like to try and keep these videos at 10 minutes, but I'm pretty excited that our strategies are starting to kick in again. I'm actually working on a couple of new strategies. One is called the U-turn, which trades long and short. Hopefully it'll make it past what I'll call the peer review process with some of our other traders, and it'll make it past that process and onto our website. And if it does, excuse me, we'll be announcing that. It's still in development, and we've just been playing around with a few other ideas as well. So let's just kind of, I just want to jump back to, oops, okay, well, sorry, that's going to kind of reset things here if I've drawn any lines on there, but yeah, so here's my typical view. I just expanded out the daily chart. Here's the 60-minute. Here's the on the right hand side the seasonal average. So I just want to kind of jump around to a few other charts. Let's just look at TLT, and you can see that TLT looks like it's found an intermediate bottom, which would bode well for interest rates holding. Now, if it fails, obviously interest rates are going to go higher because TLT and bonds, which represents the 20-year, basically an average of the 20-year bond, moves opposite of interest rates. So the TLT looks like it may have found at least a short-term bottom. This looks like a bottoming pattern to me, where you have you have some positive momentum that is kind of taking place here. And the structure looks like it may be potentially changing. So we may get a move back into some of these resistance levels like 106, maybe even 111. 115 is a bit of a stretch, but you never know, right? These are markets are crazy. Is there any other markets we might want to look at? Let's just look at the crude oil for a quick second. Crude oil looks like it's building a basing pattern. It's going into a squeeze here. It's kind of fired, but it's a weak squeeze, or a weak. It just looks like a consolidation pattern here. We're struggling with these dynamic overhead resistance levels, but we did break this major downtrend line that happened from the peak, from the previous peaks of the highs that took place back in what was that, July, the middle of July of this year. So excuse me, we've broken this downtrend line. It looks like we found support at the lows. At least it doesn't look like crude oil is going lower anytime soon, which makes sense, but it's just kind of going sideways right now. Let's just look at gold. I don't usually look at gold a lot, but gold had a really big move off of what looked like this almost triple bottom, right? You had this tight double bottom formation, and then you had this this explosion higher. I expect gold will probably retest probably these areas around 1820 at least. And if you look at silver, which is usually fairly correlated with gold, it doesn't look as strong, but it looks like we found this kind of bottoming pattern. We have the potential to go higher. I believe gold and silver are highly manipulated, because they, positive gold and silver are kind of negative for fiat currencies like the US dollar. So who knows what'll happen here, but it's just kind of interesting to see that gold is perked up a little bit. And we are, if you look at the seasonal average chart, it kind of goes sort of sideways at this time of the year, but heading into next year, you have a seasonal period of strength by the looks of it. So we could be, just kind of consolidating or getting ready to move into that short period of strength. Okay, anyways, I babbled along long enough here. We're at 17 and a half minutes in the video. I hope this helps at least just to kind of give perspective on what the markets are doing. My intention was just to kind of let you guys know that we've cleared some major regime filters, at least in my strategies. Strategies are starting to kick in again. If you've been sitting on the sidelines and interested in looking at how the strategies work, now's a good time to start doing that. You can do it with a paper trading account of Valera Portfolio Manager. If you don't know how to do that, reach out to me through systematic-investors.com. I'll be happy to point you in the right direction. And now it's time to sort of, just kind of, the markets have been pretty boring lately. It's time to kind of wake up and pay attention and see what the markets, see that the markets are starting to move again, and maybe it's time to start getting active in the markets again. So I hope that helps. I look forward to seeing you at the next update. I think we're probably going to have an AMI broker meeting. We've held off on the last few meetings the last couple months, but I think we're probably going to have an AMI broker Canada meeting in at the beginning of December. So stay tuned for that announcement. Okay, all the best. We'll look forward to talking to you all soon, and good systematic trading. Bye for now.